Just want to get your take on this international ride-hailing market. I know that you've made some investments over time in mobility. I believe there was a startup that you guys were invested in that sold to Ola, and also in some autonomous, particularly when it comes to freight and remote. How do you judge the value in one of these companies versus another as we see Didi's F1 coming out?
You bet. Well, the overall trend is white hot. Certainly mobility is one of the most interesting investable segments of tech, going back to the eVTOL discussion in the prior segment, looking at ride sharing and looking at autonomy ultimately and how those converge, as well as the electrification of mobility, which is a fundamental enabler across that. For these massive markets, we're certainly looking at long-term TAM and overall the revenue potential that they hold. But when you look at the medium term, and specifically as we're all trying to wrestle with valuations of current businesses today that have fundamental P&Ls that are operational, we're really looking at the interplay between growth and free cash flow. We think that in bull market cases, people over-index on revenue growth purely, and then in bear markets, they revert to free cash flow earning safety. And we really think this notion of efficiency, the relationship between those two, and efficient growth should be the long-term arbiter of value. And that's what we're focused on for looking at medium-term growth investments and their overall valuation multiples in this white-hot market.
Because what does that tell you about a company when they're able to squeeze the most growth out of every individual dollar, about either their momentum, their velocity, or the product market fit that's allowing them, I guess, the leeway to get into adjacent markets?
It's a comment on all of the above, and that's what's exciting. What we fundamentally care about long term, whether it's a shopping company or a tech business, is free cash flow and their ability to create free cash flow. However, in these long visionary bets that we're making in tech, even in the public markets these days, what you have to buy into is this idea that leverage will come over time, and you want to see the profitability come from gross and ultimately net margin. And that's really the bet, trying to pull apart, particularly with these COVID markets, who have been net COVID beneficiaries and those headwinds that will, and the tailwinds that will continue, and then the businesses that have faced headwinds, which are going to pull back, and where will we see some resurgence? And so from our standpoint, if you look at businesses like a Square, a Shopify, a Zoom, these businesses have grown at 100 to 200% year over year, some of them coming off of good comps, of course, with COVID, in a profitable way while generating free cash flow. That's an amazing set of metrics at scale that these businesses are posting. And so what we're trying to deconstruct is the relationship between those two variables in the coming quarters to figure out where fundamental value is for the publics, and then more importantly for our business, the late stage privates that are about to be public.
That's interesting, Byron. You know, on the ride business itself, and correct me if I'm wrong here, it feels like the consumer is going to win, right? I mean, just layer upon layer of competition. They're already dealing with labor shortages. And it's hard to imagine that this is going to improve pricing, or could I be wrong on that?
So I love that you say that, and I think that's frankly a thesis in most of tech these days, which is the competition and the flood of capital coming into this market is going to result in more availability of product and lower prices. We're absolutely seeing that in ride sharing. And when you layer in ultimately autonomy, whether it's in the cars or the eVTOLs, we're going to have mass availability at extremely competitive prices. And that's what we're seeing in the enabling infrastructure in tech as well. When you've got AWS, you've got Azure, you've got Google Cloud competing to be the rails of modern technology, they're beating each other up in a wonderful way on pricing, which is allowing startups and businesses that are moving to the cloud to leverage that in an extremely efficient way. And those are all net positive trends for consumers and the businesses that bank with them and build on top of them.